to my channel. This is Akila. In this video, I am going to explain about ITC, that is Input Tax Credit. In my previous video, I have explained that the tax paid on the purchase of products for the business purpose will be refunded. Input tax credit means reducing the taxes paid on input from the taxes to be paid on output. When any supply of goods or services supplied to a taxable person, the GST charged is known as input tax. Input tax credit is also entitled to a person who has purchased goods for resale purpose. In case if tax liability is more than the ITC, we can deduct the ITC from the tax liability and the remaining amount we can pay to the government. This tax credit is the backbone of GST and it is for a registered person, it's a major matter of concern. Because many people will take registration under GST only because they will get refund for the input tax which they had paid. For example, if you are a manufacturer, the purchase tax you have to pay to the government is rupees 500 and the input credit you claim is rupees 300. So the total tax which you have to pay to the government is rupees 200. Many of you have the doubt that what is the time we need to avail the GST? And the answer is that taxpayer need to file a GST ITC-1 form within 30 days. And the GST form ITC-1 is a declaration form used to claim the ITC. If the goods are received in lots or installment, ITC is allowed to be availed only after the last lot or installment has been delivered. To claim the ITC, the buyer must pay the supplier for the supplies which they have received within 180 days from the invoice payment. If they fail to do so, the amount of input tax credited will be added back to his output tax liability, and it is known as reversal of ITC. Reversal of ITC means the credit of input utilized earlier would be added back to the output tax liability. Effectively, it's nullifying the tax which is credited earlier. Depending upon when such reversal is done, the payment of interest would also be required. As per Section 54 of CGST Act, any person claiming refund of accumulated ITC or interest paid should make an application in Form RFT01 within 2 years from relevant date for most types of refund. RFT1 is an application for online processing of refund under GST. It is to be filled on GST portal, and any taxpayer who is registered under GST can file for a refund using RFT1. Who is eligible for ITC? There are some conditions have to be met to entitle for input tax credit under GST scheme, and those conditions are: the first point is one must be a registered taxable person. If a person is not registered under GST, they are not supposed to claim the input tax credit. One can claim for input tax credit only if the product is purchased for business purpose. And if the product is purchased for his personal purpose, he should not claim for ITC. ITC can be claimed on exports or zero-rated supplies which are taxable. For a registered taxable person, if the constitution changes due to merger or sale or transfer of business, then the input tax credit which is unused will be transferred to the merged or sold or transferred business. To claim ITC, there are some supplementary documents like debit note, tax invoice, supplementary invoices, etc. To claim ITC, they should possess the invoices for the goods and services which they have bought. Then all the GST returns has to be filed, like GSTR 1, 2, 2A, 6, 6A and 7 etc. has to be filed. There are some more points to be covered under input tax credit, and it will be continued in my next video. Thank you.